Now, on the discussion agenda, we've got debt program structure with long-term capital planning and financial advisors.
Yes, ma'am. Ms. Hammond and members of the board, Dr. Ross, I want to say one thing before I start. I appreciate your thanks for the ESSER plan, but that was certainly not my work. That was the work of a great team that we all huddled together. So I want to, no pun intended, but I wanted to celebrate all of the staff for all the work that they went into the ESSER 3 plan.
We do thank all of her staff. Thank you.
All right. Capital financing. First off, there is no action needed tonight on this. This is just for information. I do want to welcome several individuals we have with us tonight. We have Ms. Franny Heiser from Burr Foreman. We have Ms. Emily Luther from Parker Poe. And we have Walter Goldsmith and David Cheatwood from First Tryon and Mike Gallagher from Compass Municipal. And you'll hear from some of them shortly. All right, so as we're talking about long-term capital plans, there's a few things that we would need to consider, and these would be board decisions. What's our capital focus? Where do we want to be in 5 or 10 years? That's crucial in developing a capital plan. What is the will of the board? Where do you want to see growth? Where do you want to see, or where are the needs that need to be addressed? So there's lots of pieces and parts to that. Do we want to focus on renovation? Do we want to focus on repurposing, construction, or is it a combination of all of those opportunities? We've talked about it, evaluating what property we own. What do we currently own? What do we need? What has opportunity for the future? We have previously discussed target mill values. How do we achieve our needs and our wants based on the debt service millage? So how do we remove fluctuation from the public? Do we keep that level fixed at a constant level and use those funds to meet our needs, or do we look at bond referendums? What does it look like to look at either side of that? And if we were to use the target mill value, how do we maximize our constitutional debt limit of 8%? That would be using short-term capital for long-term capital needs. To make sure that everybody understands what the 8% constitutional debt limit means, is that in the Article 10 of the South Carolina State Constitution, there is a limit to how much school districts can issue in debt. It is 8% of the total taxable assessed value of the district. I believe if Mr. Lovelace and I were talking about this the other day, I think it was around the $575 to $580 million value.
I think you told me 581 million.
581 million.
You went back and looked it up. So.
Yes, sir. So right around that 580 million. That was based on the last assessed value. That would have been after reassessment. So we are able to issue 8% of that. That's our limit. And that would be, remember, this is our debt service millage, so this includes all property that is in both sides of the districts, the Lexington and the Richland side. So we have an opportunity to target a mill value. Where do we want to see, how much money do we want to have available? And if we maintain this school year, we're at 73.3 mills, down from 75.4. If we set that target mill value, what does that do? How does that enable the district to be able to issue short-term debt that can be paid off within a year or a short period of time, maybe 3 years, similar to the way the Piney Woods School was completed, without a bond referendum? So as I was looking at financial advisors, which is kind of what we're talking about tonight, went and found an RFP that had been issued just a couple of years ago. And these are some of the duties that were listed in the RFP, and I thought they were very relevant, and I wanted to share them with you, because a financial advisor relationship is not a transactional relationship. It is very much a relationship on building a debt program structure. It is built on what the needs of the district are, and it's more than just a one-time thing. It's something that we would need to work with, just as you would your own financial advisor on a personal. You wouldn't go transactional. You would want somebody that really understands you and your financial situation. So they not only plan and structure our bond issues, they work through the bond sales, but they also help the district in that financing program. What does cash management look like? When do we need the cash? When do we need to issue debt to maximize the best interest rates for the district so that we can maximize the amount of funds that we have available. So it's not just a one-time thing. It is definitely a relationship that the district would have with someone who is very well-versed and very knowledgeable about the financial market. So in summary, it's somebody that's acting on the best interest of the district, helping the district make financially sound decisions, but always being mindful of the impact on the taxpayer, because this is relevant to the taxpayer. This is, the debt service millage does affect to some limit homeowners and businesses. This is not just investment property tax. So I want to make sure everybody understands that part of it. This would affect some 4% property as well. Any questions on this part so far? All right, I'm going to let Mr. Mike Gallagher come up, invite him up. He's with Compass Municipal Advisors. Mike has worked with the district for a good period of time, and let him talk about what Compass Municipal has that they could offer.
Thank you for that explanation of an overview of all the services that, and building that relationship. Thank you.
Madam Chair, ladies and gentlemen of the board, it's a pleasure to be here with you tonight. I'm Mike Gallagher. I'm a director with Compass Municipal Advisors, one of the principals of the firm. Let's talk about first, why Compass? We represent 90% of the school districts in South Carolina. That's 63 of the 73 districts. Over the last 10 years, our team has brought together 360 issues to market with over $11 billion issued for construction. This gives us a long-standing relationship with the buy side. We're here talking about what we do for you, but there's a lot of things that aren't seen sometimes on the other side of the transaction, on the buy side of the transaction, our relationships with underwriters and bankers. Those are key because that volume, you benefit from it. We've got diverse experience to meet diverse needs. You look at a performance contract, do you want to pull in and use ESSER funds, or do you want to use equipment acquisition agreement, or do you want to use part of your general obligation bonds? You know, those are all discussions to be had. We have a very strong background in quantitative modeling and technical analysis. That just means we got some really good math geeks. Our capital planning is included in your transactional fee. So much like we did with the process in 2019, we ran very many models for the district, and ultimately the district chose. I believe Mr. Lovelace is the one that made the recommendation for going with a 3-year term. We provided those options for you all to decide what you want. It's your program. We just assist you. We take a little bit of the planning burden off your finance staff by trying to help guide through those things. Speaking of your staff, we're able to provide continuity when a new staff member comes in. We're able to say, you know, Marty came from Lexington too. I worked with her in Lexington too. The first thing she said, well, where's my building program funding report? What does that look like? Helps for a smooth transition, and it's a good understanding of what your overall debt plan is. We're here to attend your meetings. The right transaction quarterback translates to staying on schedule. If you don't, you could possibly fall off schedule and you wouldn't have funding when you need it. We do have an established track record, easily accessible. We don't have 9 to 5 business hours. We're here tonight. I was answering emails and stuff on Saturday and Sunday morning, so we don't have just a standard. But we have a very, very high level of responsiveness because we take it very personal to meeting your needs. Our firm is headquartered in Columbia, South Carolina. We also have an office in Lexington, Kentucky. Our team of advisors have been together for almost close to 2 decades. So there's a lot of experience, a lot of breadth of knowledge there. As you can see, all the areas shaded in blue, those are school districts that we represent. It's a vast majority of them. There's a few that we don't work with, but the key thing I would say is here in the Midlands, we work with Richland School District 2, who passed a very large bond referendum and has a mixed plan on what they do. We also work with Lexington School District 1, which passed a big bond referendum back in 2018 as well. One of the key things I would say there is both of those programs, their debt issuance is progressing at or ahead of schedule, and they're coming in under the millage projections that we gave them, which that is key. Because the last thing I want to do is have a projection that is not met. The first thing you're going to want to do is throw me out on my head. We don't want that to happen. Here within your district, we also work with Irmo Chapin Rec Commission and Irmo Fire Department. So we work with other folks besides that. And you'll see there's some dots on there, and those represent the cities and counties and special purpose districts that we also work with. We have 8 licensed advisors on our staff and 6 staff members dedicated to the state of South Carolina. As Marty was talking about earlier, one of the big things is the capital planning, that debt model and debt issuance. The other big key is that annual building program funding report. We put that together every year. When we get the audit, we go ahead and update that information for what was your actual collected value of a mill, what was your assessment information, put that in. Look at the debt service millage management. If the objective and goal of the board and the district is to maintain a level debt service millage, we work to achieve those goals. We monitor refinancing activities. We brought you one earlier this year. Over the last 24 months, 14 school districts have taken upon refundings for a savings of $57 million. A school district that we were just rehired by, Beaufort County School District, tomorrow will be selling a $17 million refunding. We assist and monitor with the ratings process. When Moody's come out with their new school methodology, there were 5 districts in the state, 5 to 6 districts in the state that had changes in their ratings because of that. We had individual calls with the analysts to discuss that. It wasn't something that impacted y'all, but it was one of the things that they had that was going on. One of the other unique things we have is an online client portal. So all of the bond documents, whether it be our final schedules or the bond transcripts or the letters or the rating letters, all of that is put into this online portal where your staff has been able to get it. And if your staff doesn't want to, I have some clients that don't want to go to the portal. They just send me an email and we send the information to them. Capital planning services, Marty did a great job talking about that. That is a big thing, planning what things look like down the road. And we will, we would love the opportunity to continue to work with you to develop that plan. I noticed when I was here earlier this year that your 5-year plan that you approved had $10 million in it next year, and then the following year was going to go up to $15 million. Well, under the current structure and what we had in our information, your millage would actually go down next year, and then there would be an increase the following year. So that's a discussion that would need to take place. A very hands-on approach is what we utilize. We don't sell you any software or give you any software. We do the work for you. And so we have diverse experience to meet your individual needs, and we can pull from our experiences with the many other clients as to what helps you meet those needs. SCAGO. Let's talk about this one for just a minute. It was a question that came up when we had the resolution approved earlier this year. You borrowed $10 million. It was issued on May 22nd. It was sold. You got a true interest cost of 0.14%, 14 basis points, incredibly low rate. One of the benefits of the economies of scale that you got was on the ratings. This was sold as a publicly rated issue. Your prorational part of the ratings fee was $2,372.70. Had you went and done a standalone transaction where we went and got a whole POS and took it to market, would have cost, just on the rating fee alone, would have been $12,000. It was a big savings there. Staff didn't have to put together the POS. Staff didn't have to spend an hour on the phone with the rating analyst. So there are other things that are intangibles that may not be equated into it. The all-in cost for that transaction was a 0.81%. We had a district that did an open market transaction on the 13th of May, just a few weeks later, $12.4 million. Total cost of issuance was $115,000. Their TIC was a 0.17, so they got that very low borrowing rate, but you can look at their all-in cost, it was a 1.34. That's a little bit higher. And then we had one that did a bank loan, and it was a day before we priced the SCAGO GEO program. They did $4.5 million, had just under $40,000 of cost of issuance. The rate they got, being this was done as a bank loan, they paid a little bit more. The bank rates have come down since then, we've noticed. There's been a few new aggressive bankers that have come in, but that one was 0.74. You don't know because all of these deals are sold on a competitive basis. We put it out to get the best price on the market that day, but that had an all-in cost of a 1.84%. Bringing us to your Series 2012B refunding that you have, we've been monitoring this issue for 2 years. We sent it to your prior CFO, and that is something that, those bonds are going to be callable on March 1st of 2022. At this point in time, a tax exempt is going to be the best way for you to go. The net savings based on the market rate yesterday is going to be right around $9.8 million. Of course, that's going to be a competitive bid. We can't guarantee that amount of savings. It's going to depend on what is the market on the day that we sell. This was on the assumption of a refunding that sells in November of 2021. The net present value savings is 13%. I told you we got some math geeks. These guys love to get in and crank out these PV values. And so the industry recommendation is 5%. Yours is at 13. So it's definitely in the box to move forward. One of the unique things is depending upon your individual needs, you can adjust the repayment or the amortization schedule on this. It doesn't have to be a level savings. If you need additional money for capital projects next year and you're going to revise your capital budget, we can make changes to this. This could be something that could fit those goals. Or if you wanted to stay with your $10 million next year, you could pay this refunding bonds off earlier and have a greater level of savings. We have a very strong commitment to public education with a 90% market share. Our seasoned staff maintains relationships with a network of underwriters and bankers, along with the crediting agencies, to position us to have desirable impacts for our clients. We're very accessible and responsive. We've got a diverse level of experience to meet diverse needs of our clients, and we deliver the value and cost savings of SCAGO for short-term borrowings. And there's a picture of our staff, myself, Brian Nurick, and Bob Dameron. The three of us have been together since 2003. That's almost unheard of in this business for people staying together that long. Michael George is our head of analytics, and he's also over our Kentucky division. He's a managing director, and then we've got Louis Ragusa and Courtney Burke on our staff. Thank you.
Thank you.
Thank you, Mr. Gallagher. Next, we're going to hear from First Tryon Securities, LLC, which is also the parent company of First Tryon Advisors. Will speak to you, Mr. Walter Goldsmith.
Great, thank you very much. I'm Walter Goldsmith, and my colleague David Cheatwood is with me as well. It's nice to be with you tonight. I know it's late, and I'll try to move as quickly as I can. When Marty first reached out, the sort of starting place for our discussion is to look at the debt that you have outstanding. That's what you see on the slide in front of you. And there's a lot of information on that page. I circled two things that sort of jump out to me as a financial advisor. The first is the small red circle up at the top of the page. Those are the 2012 bonds that Mike was just talking about, and that those are callable, prepayable in March 1 of 2022. So coming up very shortly. So I'll spend just a couple of minutes talking about that. And then the other thing that caught my eye is the big red circle, and that chart shows your annual principal and interest payments. And what's going to happen is after 2022, your payments are going to drop from about $40 million a year down to $20 million a year. And so I'm going to talk for a few minutes on that, sort of those two initial observations. So let's first talk about the small circle. You've probably all read through the pandemic that interest rates are at near all-time lows. This chart goes all the way back to 2010, so it's basically or 2011. It's a decade of where interest rates are. And while we're not, if you look all the way out to the right, we're not at the all-time low point. That was last year we hit the all-time low, but rates have trended back down. And so if I'm sitting in your chair as school board members, the question I would be saying is, if I've got $175 million of debt outstanding, is there any opportunity to refinance that? Just like you or I would refinance our home mortgage. And the answer is yes. Mike mentioned that he was seeing about $9.8 million of savings. What we're seeing is about 10.1. Either one of those numbers could be right. Don't hire me because I said $10.1 million. It's the snapshot of when we looked at where interest rates are. But the takeaway as board members should be, do we want to take advantage of where rates are today and try to refinance that debt? The annual savings are that big red circle on the right side of the page. So about $1 million a year in savings to you. That's $1 million less that you're paying to investors who own your bonds out in New York and keeping that $1 million to spend on students in the district. And so, again, sort of two observations. If I were in your chair, I would be saying let's go ahead and move quickly on that refinancing to capture those savings while rates are low. No guarantee that rates won't drop lower, but I think sort of the thought is that they're more likely to trend higher rather than lower. If you said go, let's go do that, you would want to wait to close it until December 1. And the takeaway from this page should be there are a lot of steps that have to be done. You'll see at the bottom of the page, December 1 is the closing date. But you'll see sort of activities all the way back up into November, October, and September. And so it is very doable, very achievable if you said begin to hit that closing date in December 1. You don't have to close it then. You could wait until January or February or 2023 or 4 or 5. But our advice to clients has been while rates are this low, move as quickly as you can to lock in savings. So that was initial observation on your debt. Now let's go back and talk about that big red circle at the bottom. And this, I think, is what Marty was really touching on, which is I think you've got, I don't want to overstate it by saying it's a once-in-a-generation opportunity as a school board, but I think it's pretty significant because your payments, principal and interest payments on your existing debt are going to drop by $20 million, which would normally mean your property tax millage rates are going to drop in that year. And so what you've got to decide as a school board is, do we want to layer on additional debt? Do we want to put in additional principal and interest payments, sort of where that red dotted line is? And I'll sort of where the red bars are, continue to put principal and interest payments in there so that from a property tax payer perspective, a citizen's perspective, do you keep the principal and interest payments level, which means the property taxes stay level, or do you let them drop? So do we not issue as much debt and let property taxes begin to decline? What a lot of my clients would say is, what they don't want is to yo-yo, we're going to drop the tax rate this year, and then in 18 months we're going to issue debt and spike it back up, because it just leads to this sort of tax rate shock, if you will. Taxpayers are constantly confused, and so you want to have this really well thought out plan, and that's really what we specialize in. And so we call it our capital planning model. It's nothing but a really large Excel spreadsheet that we build for you. But it starts with looking and putting in some key inputs, and so I've got all of those in the funnel. So we look at things like your existing debt, your historical financials, your borrowing needs that you have. So what are all those inputs? And that's us listening to you. And then what are the things that we're measuring out there to the right? Well, the first is obviously property tax impact. So if we're going to talk about, do you remodel schools? Do you buy new equipment? Do you build a new school at some point? The questions that you're going to be saying to us are, well, what's it going to cost us in terms of property tax increase? What's it going to do to our financial picture, so our fund balance level, what's that going to look like? Are we going to adhere to our financial policies? Because all of my clients who sit on school boards will tell me that they want to leave it better than they found it, so they don't want to drain the fund balance or leave the district in poor financial condition. So do you comply with your policies? And then a lot of my clients say, I want to look at what the impact on my credit rating is, but also how do I stack up to other peers around the state, other school districts around the state. So what are my financial ratios? What are their financial ratios? and then look at just revenue and expenditure performance. So as I mentioned, it's this large capital planning model, and it's got on the left some on-off switches. And so what happens is the first step is you tell us your wish list of projects, which might be we want to spend $10 million a year on new equipment, or it might be we want to spend $10 million this year and $15 million next year. And someone else on the board may say, well, what if we want to add on to a particular elementary school? And somebody else might say, well, what if we want to build a new high school? And so we take that entire wish list of projects and put it in. And then we have the ability with those on-off switches to sit in a room live with you and turn those on and off. And so we say, well, what if we funded everything that everybody wanted, the entire wish list? We're going to build all the schools, buy all the equipment, renovate any areas that need it, new roofs, new HVACs. And so we start to map that out with your facilities people. Well, when do you need that money and how much is it? So just a good long-term financial plan. And then we're going to ask you questions like, do you want to hold a referendum? And there's some complexity and time involved in that. Or do you want to issue it within your 8% GO capacity? And think about that sort of like a credit card. We can max it out and pay it off the next year and max it out again and pay it off the next year. And you could build your house that way, right? You could max out your credit card, pay it off the next month, and then buy plywood, and then windows, and then roof, and eventually you'll get that entire house. Or do you go out and take out one loan that you're going to repay over 30 years? And so there are different interest rates and impacts with that. And so we've got the ability to play with that in the model live in the room. And then what are we measuring? And we have these series of dashboards. You'll see the top one in yellow is the millage rate. That's the thing that a lot of folks are going to care about. If we turn on all of those switches and we fund everything we want, what's the impact on property taxes going to be? We're monitoring down at the bottom of the page your 8% capacity. That's that balance. How close are we getting to maxing out the credit card, so to speak? And then we're going to start to look at things like fund balance over time, payments over time, debt service payments, some key financial ratios. We're going to measure what that does to your credit rating. So that's sort of like you and I have a credit score. You're going to want to be mindful of if we spend all of our cash and drain our fund balance, or if we borrow too much money and our payments are too high, what's the impact? And so we'll be able to show you that live in the room. And then that fourth item are the peer comps. And so I've got on the left side of the page, running down that page, your key financial ratios. So let's just look, for example, row 4, which is the first one highlighted in yellow. Your fund balance is at 23% of your budget. So if we took your fund balance and looked at what it is as a percentage of your revenues, it's 23%. That's just a good metric. And then across to the right, you can see I've got Anderson School District 5 is at 27%, Florence 1 is at 24%, all the way out to the right, Rock Hill District 3 is at 23%. So we track all of those financial metrics so that we can show you if you, for example, if somebody said, hey, we've got too much fund balance, let's spend some cash, let's not take on debt, then we would show you exactly what happens to your ratio, what happens to your credit rating, and what the impact is. And so we can literally, sitting in a room in a workshop, run through 20 or 30 scenarios with you. And what my clients generally tell me is the home run, they'll know they've found the right long-term plan when they can fund everything they want to fund in the time period that they want. They can live with the millage impact of that, and their financial policies all look good, and they maintain a strong credit rating. And you just sort of run through that loop, and if you don't check one of those boxes, then we go back through and, well, do we need to turn off a project? Do we need to delay a project? Do we need to renovate a school instead of build a new one? And so that's the power, and I think that's what Marty was saying, that a financial advisor will do for you is build that model so that you're in the position to make good decisions. So again, those were the two things that jumped out at me looking at your debt. The refunding small circle, I would encourage you to move quickly on that. And then the financial planning, you've got some time, but in terms of urgency, if you think about it, your millage rates, you need to have your debt issued before the property tax bills go out in September of next year, calendar year 2022. So the financial planning is not something that I'm telling you, boy, you've got to do this week or this month. You've really got into the fall and into the early spring to decide on that. The refinancing of the existing debt where you can save the $10 million, I would move on that in the next few weeks. And so I'll put on sort of my sales hat for just a second. The sort of three things that I would say are recommendations, and it's a bit of a sales pitch. The first is we would love to compete for your business. We would ask that you send out an RFP for financial advisors. We'd love to give you a proposal and tell you more about our firm. The second is, recommendation is I would move on that refinancing, take advantage of where interest rates are. And then the third is develop that long-term financial plan, that tool, so that anytime something comes up and somebody says, well, should we remodel this school or build a new school, your knee-jerk reaction should be, well, let's run it through the model and let's see. And if we can afford it and live within the millage impact and the impact on our budget and financial policies, great. If we can't, then it's just like all of us in our household budget. We've got some tough decisions to make. You know, we renovate, add on, do whatever we need to do rather than buy a new house. I've also got, it's late, I won't go through it, but I'll leave it with you. We've got in the back information about our firm, sort of capabilities, client list, our sort of standard sales pitch. We're headquartered in Charlotte, been in business 25 years, focused primarily on the Carolinas and Georgia in terms of advisory work. We've got over 250 clients, work with a lot of folks in your area, Richland County, Lexington County, the zoo, Lexington Regional Medical Center, lots of cities, and we do some school district work around the state as well. So we'd love the opportunity to compete for your business. So that's it in a nutshell. Any questions?
No, but we thank you.
Great. Thank you. Thank you.
All right, so let's start. Okay, both companies explained to you and talked about the 2012 callable bonds. I've brought this to you in the past. I just want to remind you of the dates. March 22 is the callable date. However, we would need to issue those bonds late November, early December to be able to take advantage. That would be the earliest that we could issue them to take advantage of it. But it is a process. It's something that we would need to really be eagerly working on as in the next couple of months, getting the resolutions done. You have a question, Mr. Rollins?
Yeah, I just wondered, what I heard was RFP, and I just wondered how long it would take us. I mean, I see that we need to move. Okay, that was obvious from both speakers. And I just wondered how long it would take us to put together an RFP and get that out and get it back and make some decisions.
We can do an RFP. We would need to advertise for at least 10 days and then evaluate from there. This is a procurement exemption. It does not have to go into an RFP. It would be subject to board approval. So that would be for your choice. If you want me to do an RFP, we certainly can, or the board can make a selection. I'm not asking for a selection tonight. I really would like for us, I believe I understand that we are going to try to have a workshop at our September 13th meeting. I did bring Ms. Luther and Ms. Heiser here tonight because they would be bond attorneys that are on our approved list to be able to work with. And I know that we also have Hainsworth, Siegler, and Boyd. I really would like for us to understand what they contribute to this process also, not tonight, but at the next board workshop.
Oh,
Yes, ma'am.
Ms. Rawls, maybe explain to the board, which you're doing there some, but we did talk about, I know I talked to Ms. Heisman about a workshop. She was kind enough to offer a free workshop for us, and as we talked about it, we wanted to have we thought we'd open it up to other people on the list.
Yes, ma'am.
So did we decide maybe and I'd like to ask the board, we talked about maybe doing it before the next meeting, like if our meeting's at 5:30, board members, we would have this at 4:30, an hour before, if that
Yes,
would
ma'am.
maybe suit Ms. Hines while y'all are here. Would that be feasible? Okay,
Yes,
good.
ma'am. And what I thought we would do is we go into a little more detail on what a capital program could look like, and also get the perspectives from the attorneys at that meeting. So that way you have a full, all the information that you would need to make an educated decision on a long-term capital plan and what financing tools would be best for our district. But if there's any other questions, I'm happy to answer.
I think that's
Yeah.
Ms. Huddle.
I don't have a question, but I did want to make, I guess, a point. and that is, just because you can borrow money doesn't mean you should. And so I think both of the speakers, and you referenced it too, a capital plan. To me, the plan is not, we want this much money. The plan is, what do we need? So, you know, just, you don't borrow $1 million to buy a house if you just need a $300,000 house. So I'd kind of like to, you know, just talk for a minute. I know we're all tired, but how do we, is that something we can ask the facilities committee to study and bring to the full board? But how do we develop a long-term capital plan and then say, okay, how much money do we need for this plan? And hopefully we'll have enough without the yo-yo, but I just don't want to borrow money just because we can.
And Mr. Lovelace, if I can just say one thing, you know, now that we know that that is the will of the board, Mr. Beedenbow and I can certainly work on this and have projects suggested over a period of time that would lend itself to being within our budget, but also not just putting projects on there to make a budget. So we have the facility study and other things that have been done to address where the needs are and what needs to be taken care of. So I believe with that, if we developed a plan, then we put pricing with that plan, and maybe we have to rearrange things because it might be outside of what our limit is in a specific year, but it would always be based on needs, not necessarily we want a gold-plated plate.
I think that's a great idea. I guess I also would like us to just think about our strategy. You know, is our strategy to, I mean, historically, there's been total inconsistency with bond referendums. We did a bond referendum for a bunch of buildings, and some of which did not get built, and then we used 8% money to build a whole brand-new school. So, I mean, I think that's a discussion that we just have to have as a board, is do we have a philosophy about when you use bond referendums and when you don't? So that, and I agree, a plan is great too, but to me, almost we need a philosophy first.
Well, that's what I was, you know, that we were talking about in the facilities committee, that we need to come to consensus on, you know, exactly how we expect to pay for this. Okay, and we were talking about whether we wanted to keep our millage rate, you know, at the same percentage and fund things. And we projected how much we could fund if we did that, or if we wanted to go with a bond referendum, which is an entirely different subject altogether. But I think Dr. Ross had a real good point on that, is that bond referendums, you don't really use them unless you're busting at the seams everywhere, and you know, with over demand. And I'm not sure we have that, but what we do have is some specific needs to have to do with redistricting. And I think we need to come to a consensus that that's what we really need to do as a board. And I think the workshop that we're going to have is an excellent idea, because that'll help us come to reach that consensus and be able to tell the public what you know, why we're doing what we're doing.
Ms. Huddle made a good point. You do too. And I'm glad that Ms. Heisman is here tonight, and anybody else with our workshop, because that will be, I think, if you're hearing what the board would like to hear, y'all can bring us these ideas. And then, Ms. Huddle, I agree with you. After we hear that, we do need a conversation with the entire board about that, the goals led by Dr. Ross as you look at the needs of our schools. So
And I did print a list of our outstanding debt today, so I have this here for anyone that would like to have a copy of it, just so you can see what is outstanding as of today, and I highlighted the one that is available to be refunded.
Thank you, Ms. Ross. I know it's late. Everybody's got to get up to work. I will take Ms. Hines' question. Yes.
I just have a couple questions. The presentation that both firms presented up here, can we get a copy of that? And I just want to make sure I heard this correctly. They will both be at our board workshop at our next board meeting? Okay, so if there are any questions that we have, I'm kind of processing the information that they have, and I've written down some questions, but it's late, and I was just wondering, if we have any questions, can we email that to Dr. Ross or to you to give to them to provide answers to the whole board before we go into the workshop on the 13th? Because I have a couple questions in my mind that I'm trying to like flesh out right now, and it might save some time and be a little bit more efficient, and give them some time to prepare for, we're not putting them on the spot.
Definitely, yes.
That's a good idea.
And so at just also to clarify, at the next board meeting, are we looking to hire a firm?
I think we would just,
I think at that meeting, we would need to decide if you want to do an RFP, because at that meeting, I would need to be heavily into, and I can certainly have one ready to go if that is the decision of the board.
Okay, so is that, I'm asking the board, is that, what are our thoughts on, are we thinking that we'll have, we'll be asking for an RFP at the next meeting, or
well, I will entertain thoughts of all the board members. When Marty and I discussed this, Ms. Ross, we had talked about the workshop, then I would have thought we would maybe wait, we need to move, but we would make a recommendation or a motion that night on
Okay.
the RFP, or if we wanted to go in time, but
Okay.
it would be fresh on our minds. We would
Okay, just making sure I'm clear, and that's why I was
and that was
asking if we
just,
could get a
that was my
copy of-
thoughts. If
Okay.
is there any other thoughts with the board, I certainly would hear it. Okay, does that sound good?
Yes, ma'am. Thank you.
Ms. Heinzman, you have stayed here to this late date. You certainly
Thank
have
y'all
the floor.
for, Franny Heiser with Burford and McNair, and Ms. Luther's here from Parker Poe. The workshop on the 13th, I think everybody will be back here, but I don't think you're gonna have time on the 13th with an hour and a half before a board meeting to go through your philosophy and to work through your long-term planning issues. So I just wanted to make that clear that we'll all be here and talk about debt and options and whatnot, but it'll be a multi-step process for y'all to come to those kind of decisions, and not likely to happen, and shouldn't happen in one
night.
afternoon.
No, I agree.
Thank you.
But I thank you for that point. And I think, though, it all can fit together, Ms. Huddle. I think your point was well taken. But we can see what they have. We can bring questions, like Ms. Hines said. I think that's a good idea. And then that philosophy, I think, is going to be something that evolves and develops when we know what it is you have to offer, and, the board looks at, we learn from a workshop things we, need to know in order to set a long-term plan. It's Dr. Ross. Yes.
I think what we recommend is that we get the presentations from Compass Municipal and First Tryon, get those to the board members so that you can review. We have a few weeks before the next workshop. Send your questions in to myself, and I'll get those to Ms. Rawls, and we'll get those to the representatives so they'll be prepared. I think in terms of the refinance, if I was to break this down into steps, I think we would all agree without a philosophy that that's going to be something that we need to move forward on. And in phase one, it's really looking at taking advantage of those low interest rates.
Exactly.
In phase two, as we look at the millage rate piece and what are we going to do in terms of keeping that consistent, or the yo-yo, I think that would give us some time of looking at what our long-term plan is. We do recognize that before, and Member Lovelace talked about it, bond to me is Rifffield east to west, and we need a bond. The question is, what can we do for a lot of our schools in the eastern part of the
Immediate
district
needs, yeah.
to get those schools up to the facility structure that we need? How do we take advantage of the 8% money, max out to get those buildings to look like some of our newer buildings?
Exactly.
So I think that leveled approach would be best as we look at time, but using the meat and potatoes of the workshop on the 13th to look at the financial plans, see what we can, your answers, and then moving forward to see if we can exercise the benefits of these interest rates.
I think I couldn't say that better. So I'm going to move, that was discussion, and we appreciate how late you guys had to stay. I apologize, but it's so important to hear from the public, and we did have 15 speakers, and then a lot of other important issues, so thank you for bearing with us. 16, financial and operational audit, and this is just for discussion.
Ms.
Ms.
Hammond?
Huddle.
Yeah, I'd like to, and I know everybody's tired, so I'll try to be fast. I know this is just a discussion item, but I would ask that the officers consider putting this on for action at the next meeting. And I'd also like to clarify that personally, I think we need a procurement and operational audit, not a financial and operational audit. A financial audit says, are your books correct? You know, if this was an automobile expense, is it in the right account? It doesn't say whether or not we should have spent that money. And I think we've had a good, clean financial audit. The reason I think that we need to look at procurement is we've accidentally, frankly, come across as a board several different issues where, and these are all, to be very clear, these did not happen under the current administration or finance area. They actually go back for several years. But we had a consultant that didn't go through an RFP, wasn't approved by the board, cost us about $279,000. We had a substitute teacher contract, which we all know about, which we had to amend and ratify. And then we had an issue with sewer taps that we purchased that never got used and expired. And all of this has cost the district a lot of money, and I think that we need to kind of clear the decks, have a good procurement audit to make sure our processes are good so it doesn't lead to any of these kind of wasteful expenditures again. And also, whatever holes were in these processes, because these go back to 2013 to 2018, whatever holes were in these processes, that those holes have been plugged so that this doesn't happen again.
Thank you. Anytime we can save the taxpayer money, it's money to go in the classroom, so I'm with you. Any other thing about the discussion? Because this is just for your questions on it, or? Okay, seeing none, I'll move to 17, update on construction projects completed in 2021. You have to make this short, because the next, Mr. Beatmall, the next thing is adjournment, and everybody's sleepy.
It's past my bedtime,
Mine
too.
too.
Thank you, Chairwoman Hammond, board members.
Thank you. I'm sorry you had to wait this to the last minute, but sometimes, you save the best for last,
Well, I'm accused by my peers of taking more than I'm supposed to, so I'm going to do that once again. Dr. Ross will have to shoot me in a little while. I know you wanted a construction update, but I do want to just bring to you that we had a 2-week shortened summer, and if you'll look at this school and all of our schools, our facility staffs at the school with a 2-week shortened summer did a great job. So it's not just about construction, it's about what happened over the summer with 2 weeks less than we did. And they did a great job of cleaning our schools and getting people and students ready to come back to school. So the facility supervisors and our custodians should be thanked as well. So I think I had to say that, Dr. Ross. So I'm just going to give you a list of updated projects. These are not necessarily just capital projects. There's some projects we've done through maintenance and capital, but I wanted to bring those to you. They've been inspected. Not all have been completed, but there's some issues with COVID getting equipment, so you'll see that throughout my shortened process. So at Chapin Elementary, we installed a new chairlift in the theater for ADA compliance. So that project is complete. If you haven't been to Chapin Intermediate yet, we sanded and repainted the gym floors. We do this about every 6 to 8 years, and this turned out really well. New logo, new paint, new floor. It turned out nice. So I would encourage you to go there and look at that in person. It looks better in person than it does in the picture. Chapin High School, this is one of the projects we've done through Capital. This is complete with the exception of the equipment. Due to COVID, the equipment is back ordered. It's supposed to be here around the middle of September. So that project is not complete, but the work is done. We're just waiting on equipment. We did some patchwork between Dutch Fork Middle, Dutch Fork High. We had some problems with the road construction, so we went in and corrected that. And again, Dutch Fork Middle as well. We had to do some weatherproofing and roof work at Dutch Fork High School. That project has been complete. We did have some problems with leaks, and hopefully this will take care of it. So this project is complete as well. At Harbison West, as mentioned earlier, we do have this and ESSER 2 funds. We couldn't wait on this unit, so we did have to go ahead and replace this unit. We just couldn't wait to get it replaced. It's a unit, but that was done out of maintenance funds. Irmo High School, we sanded and repainted the gym floors. We paved the gym parking lot. We did roof replacement over the west wing, and we've done HVAC replacement and ceiling lights. We have worked on the bleachers. That is another job that's not complete. The demolition has been done, and it's been hard to get the metal for this project, so that supposedly again in the next 2 weeks we'll have that project complete if the materials come in. So the floor, if you'll look to your left, turned out really nice. So we did a lot of work at Irmo Middle School. We paved the front parking lot. We replaced the roof, HVAC replacement at Irmo Middle over the gym, and then we've done some HVAC replacement. Still a lot more to replace there, and a partial roof replacement over the kitchen at Irmo Middle. We painted, as you can see here. I won't read you since did a lot of painting projects this summer, and there was 2 that I did leave off. We did a lot of painting at Irmo Middle and Seven Oaks. Those 2 were not on the list, but those 2 were other projects. We did a lot of painting this summer. We still have a couple more projects that will get done at our next break. We had a hard time getting paint, actually, for some of our schools, so it's been very problematic with paint, actually. Technology, this is just what we've done to date since of our capital funds. We've purchased 1,200 laptops, 6,000 Chromebooks, and then we've purchased some iPads, Mac Minis, and MacBook Air. So we've replaced that. We still have a lot more technology to do, but this was in the first couple months of our capital spending dollars. So obviously, you see that's a lot of work, just imaging those and getting everything ready, but those have been done. So our technology department's done a phenomenal job getting ready for students with that. And then last of all, we have opened Piney Woods. We still are not complete with the project. There's still a few things we have left to do, and so it is open for business. We've had a couple issues there, and we're working on resolving those. But all in all, the school turned out great, and we're happy. So, Madam Chair, that concludes my presentation for tonight. I'd be glad to answer any questions.
Thank you. Any questions? If we had any, it's kind of late. We probably can't put them together. I think you did great. We're good. Do I have a motion for our last item?
I move we adjourn.
Is there a
I
second?
second.
Mr. Hogan seconds. All those in favor? Yes. And I wanted to meet our new people, and it's so late.